Right, now let us have a look at another bullish candlestick pattern. In the previous few videos, we have looked at the hammer, which is a single candle bullish pattern. Now we will look at a two candle bullish pattern. This is a very popular pattern. It's a two candle bullish pattern. So the hammer had one candle, this has two candles. The white body must engulf the black body. So in this two candle pattern, the first candle is a long black real body and a second candle is a long white real body. Must come after a downtrend. It must come after a downtrend, and the reason why it is called as engulfing is because the white real body is completely engulfing the prior black real body. If the shadows are not engulfing, that is fine. Shadows are irrelevant in this pattern. What is important is that the white real body should completely engulf the prior black real body. It's like a solar eclipse or a lunar eclipse, okay? It must come after a downtrend and the low of the pattern becomes support. So just as we saw that the low of the hammer becomes support, in this case the lowest low of the two candles becomes support. So the lowest low is this one, not this one. So that becomes our support. Shadows are not a concern. Black body must be as small as possible. The black real body should be as small as possible and the white must be as large as possible. What this shows is that the market is in a downtrend. Suddenly you have a small black real body. The small black real body indicates that the bulls and the bears are in equilibrium and there is not much movement in the market on that candle if it is a small black real body. So if there is a small black real body, we can assume that the market is confused or maybe the prior trend is likely to end. So, and suddenly after the small black real body, if you see a tall white real body, it gives us confirmation that in the battle between the bulls and the bears, finally the bulls have taken over, and after which we can expect the prices to go up. So let's look at an example in this. So this is a daily chart of Vedanta. This is an example of a bullish engulfing pattern. First condition is it must come after a downtrend. So we have a nice downtrend. Second condition is the white real body, tall white real body should completely engulf the prior black real body, which in this case has happened. Okay. The shadows are irrelevant. Okay. So this is a classic bullish engulfing pattern. So if I were to buy on this pattern, where would be my entry point? Always remember that unless the white candle closes, it is not a bullish engulfing pattern, because what if only 10 minutes are remaining in the day and suddenly during those 10 minutes prices crash down? In that case, when the candle closes, it may not complete a bullish engulfing pattern. So always wait for a close. Don't second guess the market. Just wait for a close, and once it closes, you have the entry point. So this is the entry point. So I write E here, and we know that the lowest low of the pattern becomes support. So if that low is our support, we keep our stop loss just below that. So that's our risk. And where would we keep our profit target? Now, I told you in some previous videos that Japanese candlesticks are a tool, not a trading system. They don't give us profit targets. So we have to look at where exactly the bears are sitting and accordingly set profit targets. So I see some resistance here. That can be one potential resistance area. I don't consider this one, give importance too much to this one, because it's a nice downtrend. This is where the problem was. This is another area where there is a problem, this one. So I think that's a resistance zone. I will teach you how to draw resistance and support zones. As professional traders, that is critically important to be able to draw resistance and support lines or resistance zone or a support zone. So that's our reward. So it's a nice 2:1 reward to risk trade which we can aim at, where the reward is at least twice the risk that we are taking. In this case, it has not gone up to touch these levels, but it foreseed that the price is going to rise from here. This is a nice channel, I would say. In this channel, the price started to go up, but it never went and hit our stop loss. So we made money, but we did not make as much money as we would have made if the price had just shot up from here. Okay. So that's the bullish engulfing pattern for you. It's a 2 candle pattern. The white real body must completely engulf the prior black real body. It must come after a downtrend, just like a hammer. And it's a very powerful bullish pattern, even more powerful than a hammer. Okay.